Hi, everybody. Kareem Khalifa, nice to meet you. Hi, Richard. How you doing, Sinatra and Alexander? War. Good God. What is it good for? Absolutely nothing. You guys remember that song? Edwin Starr. Top of the morning, Paul Smith. So crude, I don't know what the news is. I don't know if it's Iran or anything, but down sharply, holding the 50-day on the 4-hour.
Hey, Dale. Good morning.
How are you? Good morning.
I don't want to. I'm going to let you do your thing, but I think it's really. You saw the picture of in our chat room yesterday. Leon posted a picture of Putin and Macron meeting, and they were. It was so funny. They were at a table, probably about.
I saw that.
Yeah, like a huge distance between them. But there's some comments. I guess that's kind of like easing some of the tensions with the whole situation because of the potential sanctions that Russia might have. And so I think that this has allowed crude to come off a little bit, but I'm really watching like the 89 level, and I'll go back into that a little bit later. So, I think that's why we're down today.
Yeah, right? It looked like King, like a king would have a table like that, and that distance they could have. Bowled on that table.
They could have, really, yeah, for sure. Anyway, I'll be back in a few.
All right. So even though the correlation is broken down in USD/CAD, it hasn't today. Ryan, nice trade yesterday. You were short Canada. If this crude,
I think
Ryan's out. Oh, morning, Kane. How are you?
Yeah, not too bad, man. Ryan is struggling with his internet computer, so I don't think he will be joining us today.
Okay. Well, he had a nice position on yesterday, and I'm thinking if crude has followed through, everyone's saying the correlation broke down. Today it's not. And, I talked about that with him yesterday. If we get through 128, it looks like we can make a move to above 130.
Yeah.
So
it all depend on the oils, right?
On the what?
On the oil.
Yeah. Maybe a little bit of the dollar, and the end's hanging tough too. Okay, man, what do you think? I mean,
there's been a couple of things on the yen that I was mentioning that over the past couple of days, Kuroda, Wakatabe, they're all still saying we are going to continue to press on with whatever is in place right now. To me, the big days will come end of March, their next meeting, but especially in April, I would say.
Is that the end of the fiscal year in March for them?
There. Yeah. But there was also some data out overnight where the spending was going down again, wages were going down again. So nothing hints at Bank of Japan being able to take the foot off the pedal, despite the 10-year JGBs hovering around, the yield hovering around and even above the 0.2%.
Yeah, are you through at the end? Because I'm wondering what you're thinking here in euro. I mean, it's hard to be bearish euro after what happened last week. Are you looking to buy dips?
Well, actually, as a matter of fact, I was yesterday through the raindrops. I was playing it actually from the short end, because I think we're going to need a fresh impetus to take it through the 115. In the meantime, we could still be trading like a bit of a slow puncture tire and come around one. Yesterday it was we had this spike up to the last high, and then yesterday not being able to trade it above 114.60. then walking in today, we're rather closer to 114. Overall, I still think the Fed is going to be a faster mover than the ECB. So is this euro dollar as such euro dollar, is it viable to go higher? If 115 breaks, I think we'll be at 117 relatively fast, but it has to break.
You know, it's interesting on my platform, and, you know, I'm not saying anything about, you know, whether it's bullish or bearish. I actually think it might be a little more bearish, but this day came in, we took out this high by, I don't know, half a pip.
Yeah,
and, you know, yeah, I just want to tell everyone, don't put your stops right above a swing high. Okay,
no.
This is not the first time I've seen this. And, you know, sometimes it's 5, 10, maybe 15. Give your stops tolerance and let your trades breathe. And don't put your stop right like a pip above it because you think you have better money management that way. You're setting yourself up for stop hunts. Okay?
Yeah, I mean, the stop on a short is definitely going to have to be above 115, right?
Yeah, to close.
Yeah,
probably to close.
or if you want to, or if you're long and you want to buy more, okay, either you buy the dip like here, perhaps around 114 if you really feel like it, but you don't go and chase it right up at the 114, 80, 90. That would be a bit of a mistake in my opinion.
Yeah, a little bit of a pullback in euro pound on this.
Yeah, I think it was more like euro. At the start of the day, it was more like the euro side, in my opinion, losing a bit of steam, across the board, and then came that Macron put in the joint pressure. It didn't look like a joint pressure, but after their air hockey game, and yeah, but
that's what it looked like, an Olympic-size air hockey game.
Yeah, it was looking like an air hockey table, right?
Morning, guys.
Hello.
Hey, Stel.
So I think the 113.90 figure for the really short term in the euro is going to be relatively important. Short term longs might have a thought, because if you look at the prior high spike that we did, and yesterday and Friday and yesterday's high, they look pretty similar, right?
Yeah,
it looks very similar. Yeah, it looks really similar. Yeah, the number of days, the number of counts, it looks very similar. So it has to hold 113.90 figure. Sorry, Stel. Oh.
No worries, no worries. I just wanted to add, good morning, everybody.
Good morning, Stel.
I just wanted to add that we had Lagarde speaking, and she said, I can't remember where she was speaking, but she tried to walk back a little bit of that hawkish tone, and she said that there's going to be gradual adjustments. Basically, you know, typical central banker fashion.
Yeah.
You know, you want to calm the market, so that's probably one of the reasons why the euro is retreating slightly. No, nothing major, but slightly against majors, and the 2-year, the Schatz is also rallying a little bit now, because it was collapsing basically after the ECB meeting. So yeah,
to add to that, Klaas Not, the Dutch guy, he is one of the most hawkish guys in the ECB, right? And he also did not call for rate hikes before October. So put those two in conjunction, one with each other, ECB will still be well behind the Fed.
Yeah, the ECB feels like they want to be the last to do anything. They want to, you know, let the Fed, let the Bank of England, let all the others do stuff, see how things go, and then maybe we join. So,
but it's a mistake not to join. That's my personal opinion.
Well, with inflation where it is, and their mandate being what it is, I don't think they have any choice.
And even psychologically, you don't want to stick around with negative rates or even zero rates. I think small rate hikes, or at least bringing it back to zero, is not going to hurt anybody, right?
Yeah,
it's not going to hurt anyone.
Yeah. Anyway, but inflation is here to stay. I wrote on the chat room about half an hour ago, headline I read on Twitter: Tyson Foods, the world's second largest processor and marketer of chicken, beef, and pork, raised beef prices by 32% in the quarter. Chicken up 20%, pork up 13%. So, you know, energy and food prices are soaring. and the economy, well, it's not doing great. Okay, it's not collapsing, but it's slowing down. So it's not a very good mix. But it looks like inflation, and I'm talking about goods inflation now, it's going to be here with us to stay. I don't see these moves reversing. We're up 30% on the quarter. Do you think if things go back to kind of normality, they're going to take them down 30%? Of course not. So,
the thing, it's not obvious for currencies to trade currencies on the back of it, right? Because historically, if I may, just this intermezzo, historically, low inflation currencies have been stronger than high inflation currencies. If you look at the yen during the 2 decades of deflation, the yen was only strengthening. If you look at the Deutsche Mark before, lowest inflation, lowest yields, but the economy was like going on okay. Deutsche Mark was only strengthening. Yeah. And so trading currencies on the back of pure inflation, in my old playbook, is not obvious.
Yeah, our friend Jason is asking if we think the Italian yield spike influenced Lagarde to walk back. I don't think they're that worried about that at the moment. If you look at historically where yields are, even Greece is still at 2.5% in the 10-year, which is, or 2.3. It's ridiculous. Ridiculously low. But and Italy is 1 point something, whatever it is. I don't think they're at worrying levels yet. Now we have a friend who wants Dale's view on metals. So do you want to have a look at metals, my friend Dale?
Okay.
I think we share the same view in the short term.
We do. Yeah. If we start closing silver over, say, 23.10, still think this is a bear market rally, and I want to see where the metals are at. Should the yen get up to 117 and yields head up towards over 2%, and then I'll take a look at where the metals are at. I think both of those events are going to happen, so I'm waiting.
And I'm waiting with you.
Yeah, the waiting's the hardest part, Tom Petty. So here's the 10-year. Still think it's not done, and Thursday would be a great day for it to really blow off, get a hot number, and have a trade over 2, and then maybe it's close to being over.
Hey, good morning, guys.
Yeah.
So let me ask you this: if we get to 2%, what do you think is going to happen there? Stel, I have to go back to the last, I don't know, 6 months, year, and you've constantly talked about if we break 2%, stocks are really going to have a difficult time with that. So, here we are, we're so close. We're, 190 on the 10-year, 194, whatever. And in my opinion, here, I'll take the screen from here.
Go
Dale.
ahead, buddy.
Yeah, I'll take it from here. But what I was gonna say is, here we are up against resistance, and this is 127% extension of the move that you saw back here in, this is all 2021, right? And then not all of 2021, but that decline there, and then this decline, at the beginning or the end of the year to December. Sorry, the end of 2021 to the very end of December 2021. There's the 161% extension. So big confluence right there in a bigger overall triangle. So you can see, we're trying to break out here. But what happens if we breach 2%? Do equities really take notice there? And since we're, everybody's looking at 2%, is it such a big level that it's going to take us multiple tries to get above there? Do we have to have, do we actually have to see action from the Fed to really push us over the line? Not talk and, we actually have to physically get a hike in March. What do you guys think here?
I personally think that when we do breach 2%, we're going to get to, 215, 220 within a day or two. I think it's going to be really quick because everybody's looking at the level. There's a danger that we breach 2%, then it's a full breakout, and then we come right back down. But I think the move will probably have legs, and a March hike is done. I mean, it's fully priced in. If the Fed doesn't hike, oh man.
Oh yeah, I mean
that's
a given. But right now it's are we going to get a half a basis point or a quarter basis point? And that's why the CPI data on Thursday is so vitally important for the market.
It is.
Because obviously a hot number. We will be trading up much higher in the 10-year treasury, and that's what dollar bulls are really clinging on to right now, is that inflation is going to be hot, and you're going to see the euro slip back below 114 soon. So let's talk about a few of the key things that we were discussing earlier. What we should be talking about is crude oil. I'm really watching here, and we talked a little bit about this, Dale. I jumped in on the conversation between Russia and we have Macron, French President Macron. He spoke to Putin. It's taking some of the tension off here, and and you can see the crude oil markets coming under a little bit of pressure. I guess if I was an Andrews pitchfork drawer, which I'm not. It would look something like, I always have a difficult time drawing these things. Something like this. So I'd have to.
Ouch!
You can
stabbing me with that thing.
It's in that. You can see. I can physically draw one, but you guys kind of get the gist of it. We have, I think, some pretty key support coming in around this 89 level. We break that, then we're going to be trading back down to 86. But are you guys? I got to ask you this. Do you have the stomach to be short crude up here? What do you think?
I'm not trading crude at all up here.
Yeah, I'm not talking to you. How about
I'm going to be buying dips. If we get a serious dip, I'm going to be buying.
Yeah, I think so too, and I think that's and we could see that. We could see that as early as I mean, you have all these tensions come off, and let's say that we get a complete de-escalation. I mean, crude could very easily be trading back in the 60s pretty quickly, but you want to be a buyer down there. Is that what you're saying?
Yeah, I don't think we'll get to 60s, but anywhere in the, it will need a proper correction, but anywhere in the low 70s, like 72, there's a 50% there at 74. So, somewhere in the low to mid 70s, I think it's, I'm going to be definitely looking at.
See, for me, it's maybe that's it. Maybe that's the ticket is really back down here at this type of support. You have to, let's remove this really quick. Because this would keep the uptrend intact, right? If you dip back down into the lower, in the low 70s, we still have a nice solid uptrend. But remember, it is crude, guys. This is the other thing too is, and I tried shorting this. I tried shorting this. Was it 2 weeks ago? Right around this 86 level.
Only once.
I'm sorry.
Only once you tried it?
Only once. Yeah, only once.
It took me more than one time to.
No, it was right here where we rallied above these highs and we were divergent with relative strength right there. And I said, I'm going to take a shot at it, and it dipped a little bit in a profitability and then it came back up in my face. And I was like, yep, I'm going to take that. I should have just locked in some.
I think if it could be the Iran thing. I started hearing about that, and Shohan's talking about it in chat. The German prime minister wants to get these talks done already, and that bring another 1 million barrels on the market,
and that would also relieve some pressure too. That is a great point. So
Biden's desperate enough to cut a good deal for Iran.
What's that?
I think the president is probably desperate enough to make concessions to Iran to get the oil flowing.
Get some oil flowing and maybe some
the juices flowing. Yeah.
The juices, also to maybe get some people to maybe his numbers up a little bit too,
Yeah.
because man, that guy is kind of unliked right now. But looking at like the dollar Canadian, one of the reasons why, and by the way, this is a kind of a long term. Everybody that's if you're with ForexAnalytix, you kind of know I'm monitoring this big long term disaster of a wedge here. I'm not, the reason why I say that is because we're right in the middle of it. I'm having I don't want to say I'm having a difficult time trading the dollar Canadian. I'm not. That's not a correct statement. The statement I should be saying is I'm, choosing not to really trade the dollar Canadian right now because of where we're at. Like, you get me to an extreme down here at like the, 125.50 or maybe back up above 129. And then I'm going to start looking at it a little bit more carefully. But based on, where we're at and based on like what crude oil prices are doing. And I know you mentioned this a little bit earlier, Dale, about, crude, not affecting the Canadian, the correlations aren't as there. They are on an intraday basis. If you see crude, let's say, trade back down towards 89 or, like 88 below 89, the figure and down to like $88 a barrel on WTI, you'd probably see the dollar Canadian spike up intraday back up towards 128. So, from an intraday correlated standpoint, I'll trade it if we see some aggressive moves. And since crude is so sensitive right now and everybody's paying attention to it, you have to be a little bit more attentive to the dollar Canadian, and same with the US dollar Norwegian krona as well, which by the way, for those of you that are again not part of the ForexAnalytix community, I'm just going to give you this really quick. This is a what does that look like? I told
Steve's nose.
Gilroy was here.
Steve's nose. Yeah.
It was Steve's nose. That's right. Or Stelios's. I'm joking. But that's a possible inverted head and shoulder pattern we keep an eye on, especially if crude comes off. You see the Norway come down and dollar might spike back up towards 8.95. But let's talk a little bit about the euro dollar. I know Kman was here talking about it earlier, and I see it as a couple. We have by the way, let me just do this for you. This is A, B, C, D. And those are, that was an ABCD, perfect measured move, right? So you can look at it like this, right? Perfect measured move there. So we knew that it was going to stall around the 115. At least, no, you say knew. It's like we knew that it was right up against resistance. It completed an AB equals CD. So it's right there. Now we're forming another flag pattern. And as K-Man mentioned a little bit earlier, we get above 115, and that should really squeeze the euro, because if you look at let me just zoom way out. So you can see these peaks way up here back in May of last year, and I'm on a 4-hour chart, so we're just very zoomed out quite a bit. But you can see these peaks, that those little peaks, all connected, 3 of them. They'll bring that resistance somewhere around here, around the 115 level. We break above 115, we should get back towards 117, which is up here. And I think the euro is at risk of squeezing above 115. And Dale, you mentioned a little bit earlier, you have your stops too close to 115. There's a risk of getting stopped above a resistance, and then, a bit of a reversal. So, but for right now, 115 stops above there has been unseen and unscathed. So, I think the risk is that we start, building a little bit of momentum back up towards 115. And if that CPI number comes in line or below expectations on Thursday, we should trade well above 115. The flip side to that is, obviously, if the numbers are hot, we might get the euro back towards the 113.50 level. I think, and I think if I heard Kman correctly a little bit earlier, and if he's here, he can. Kman, you here?
Yeah.
Okay. Hey, how's it going? You had mentioned 113.90, which
93 figure. I have. Let me see what exactly I have there. Oh, is the short-term decline from the Jan move down to the lows? There's something at 114 the figure, and then there's a slightly longer term one that saw accelerations when we broke twice above 113. It's at 113.93. Call it 90.
Yeah, I call it 90 as well, and this is the previous breakout point. It looks like a pretty big pivot level.
Yeah, so in the short term, it might be that some short-term longs might feel a little nervous if it comes back down below there.
Yeah. Oh, I would definitely agree with that. And yesterday, this is the bias chart. And for those of you that don't know, we do this every morning about 50 minutes from right at this moment in time. We go through all of our analysis with all of these instruments, kind of top-down analysis every day, and come up with the key levels that we're looking at. And all these key levels are based on fibs, support resistance, a trend line, or what big pivot that we've seen. Anyway, and you can see the asterisks denote a really strong, pivot level. These were all done yesterday, and we do them, live with all the ForexAnalytix subscribers. And yesterday I wrote down 113.90 as well. That's why when I heard you say that, and you weren't here yesterday, that's why I'm like, okay, I want to hear what Kman had to say, because you were with your son yesterday, driving him back to college. Is that what you were doing? Yeah, that's cool. And so, Kman was not here. And so I know he hadn't seen, my work. So I was interested to see what he had said he was looking at as well. And matter of fact, this I think is what you were referencing, right? Something like that. There's a lot of, you can just see there's a lot of different support coming in, around this 114, 113.90. And I have to agree that if we get below that, that's gonna shake the trees of maybe some people that were chasing it last week around 115, right? So I wanted to mention that, and then also one last thing.
What I mentioned to Dale as well was the similarity between the prior that we had like early January, between the prior spike higher and then coming back down. We also stopped on the 114, and then second time it went back down. And look at it now. The move is not completely dissimilar, right?
It's not, but let's, but the situation is, right?
But the situation is
the situation is because now you have everybody. Well, I mean, how many rate hikes is Goldman expecting out of the Fed in 2022? Is
it 6? Somebody's expecting 6.
Yeah, I think it's Goldman or Citi expecting 6. And now what's the market pricing in, for the ECB in 2022? 0.4%?
In what, in ECB?
Yeah.
Yeah, but it still would bring them back only to 0 or minus 10 if it's 0.4%.
Yeah, well, what I'm trying to say is the 0.5%. We're in a much different situation, because now here we are, several months later, not the beginning, not in January, a month, let's just call it a month later, and the markets are still very skewed towards the FOMC, being way more aggressive than the ECB. So, I think this is a different situation, because this was, following the Fed. Mm-hmm. Right. And now this is following the ECB. So I think the market's starting to say, hey, wait a second, those two central banks do have to converge a bit. Hey, really quick before Dale takes over.
Stel was saying as well, since the end of last year, start of this year, the other central banks catching up on the Fed, right?
Right. Yeah, true. Hey, real quick before I think Dale, you've got your guest Harold's coming in, right?
Yeah, Harold, one of my favorite, Malgrim.
Yeah,
Yes, you might know him better. You might know him better as Pippa's father.
Yeah, a lot of people. Well, I think a lot of people have said, "Oh, yeah, that makes sense." Putting two together. But I'm excited for this interview. It's great when you have a chat with him. But I want to talk really quick about the S&P. A lot of people are pretty down on the S&P right now, but I don't think we should give up hope yet. I think the S&P still has the potential of reaching for the 200-day moving average, which is, 200-day moving average is support. The 50-day moving average, I have to say that again, is back up at the 618 retracement, just above there. That's going to be at the top of this resistance zone. Comes in right around 4,600. This is going to be a really key resistance for the bulls. If we can get above that, we will squeeze. I think we will squeeze above there. But if you want to talk this week, we get back above like 4,500. That might open the door for a move back up towards the 4,600. This is going to be critical resistance, in my opinion, for the bears to hold. If you are an S&P bear, you are a stock market bear, you do not want to see that level breached. I think we will be able to make a run up there, quite possibly even as early as today. So we'll see. But Dale, I want to say have a great interview, guys and gals. If you haven't tried out ForexAnalytix, make sure you do so. And then also, I need to mention this, and I'm going to throw this in the in our chat box here for you guys. You guys have to register for this webinar. This is for everybody, and this could be a life-changing event for the way you guys trade the markets. So we will release and we will talk about it all next week on the 15th. Register for that webinar. It is free to attend, and we will talk it all out for you. And this, like I said, could change the way you trade the markets forever from this day forward. So, or not this day forward, but in a couple weeks from now. But we will see you then. I'll let you take over, Dale. So
I think it's worth waiting at least a couple of weeks to change my life forever.
Hey man, if we can help impact your life, your trading, trajectory from here on out.
The whole team.
I know we have, but I mean, even more so than I'm excited. So
all right, buddy.
All right, guys.
I'm too. It's going to be a nice opportunity. Harold's Rethink. Welcome back to F.A.C.E. Always look forward to talking to you, Harold. How are you? Asking you to unmute here. Turn on that microphone, Harold, so we could hear the wisdom. There you go. I hear you. Nope, you're still muted. There we go.
All right. Yeah.
Hi, Hal.
I am Pippa's dad, but Pippa and I have been together in New York and Washington for a few days comparing notes. So
okay.
It'll be maybe interesting.
Yeah, I think it is. I mean, I could lead with questions, but why should I? Why don't you tell us what you and Pippa have been talking about? I'm sure that it's what a lot of people are paying attention to, Harold. So go ahead, buddy.
We were talking quite a bit about what Putin wants to do.
Okay.
And how Washington is reacting. Basically, Washington is in a kind of sleep mode, not really excited about what's happening in Ukraine. There is activity, but the expectation that it's nothing big. However, what Putin is trying to push out through many different channels is that we should expect something big, something unusual, whether it's during the exercises with the Belarus army, or it may be that there will be an attempt to cross not into Ukraine, but rather over to a Suwalki gap between Lithuania and Poland, which has been a long ambition of Putin. So markets are very calm, not thinking anything big, thinking Ukraine only, but Putin is saying it's not only about Ukraine. I have other interests. So something big may be very disruptive to markets if it happens.
Okay. All right. So do you think, I thought it was a very significant moment, and I want to see it through your eyes, Harold. When last week Putin went to Beijing, and you saw both him and Xi standing side by side in the middle of this prior to the Olympics. So what's the signal they're sending? This is the new axis against the U.S., which it has been for a long time anyway.
Yeah, well, it's a partnership, but about what? I mean, China is much bigger than Russia, so eventually China has ambition to swallow Russia. So but what it means is that Chinese technology, space technology especially, will be available to Putin.
Okay.
Now, China is way ahead of Russia and maybe somewhat ahead of the U.S. in terms of space technology, and we're used to thinking about satellites being the primary focus. But if you remember way back, we had this horror story about exploding a weapon at 60 or 80 kilometers above Earth and creating an EMP.
Right.
China has been researching this for a long time, how to generate an earthbound surge in power without a nuclear explosion.
Right.
And
just shut down, turn the lights out, shuts down the country.
Yeah. The big question is if that kind of thing is used, it will be aimed at frying the grid below. So you don't get just a shutdown, you get a permanent shutdown of whatever grid is there. So who can speculate? But China is trying to get a handle on that technology. The U.S. is a little behind, but also thinking about it. But somehow Putin thinks that he has something special and he's going to spring on everybody. So just be aware there may be a shock nobody's thinking about.
Yeah, I mean, the markets are complacent about it, at least now. Let me ask you this. A lot of people are thinking that the withdrawal from Afghanistan was kind of a signal for U.S. adversaries that there was weakness there, and this is when they can test President Biden. What about China? Some people think that they, may want to press their advantage too. Do you think that's around the corner with Taiwan?
Xi Jinping has his very important October 20th plenary when he may be shifted from a term limited leader to a permanent leader. I don't think he wants to do anything that will disturb that trajectory. So doing something with Taiwan would be
after.
Yeah, would be sometime later, but not near term.
Okay, and do you think Putin's going to wait until the Olympics are over to make a move? Perhaps he needs the time anyway. And do you think that, we recently had like a pretty good sell-off the week before in the gold market? Do you think Russia needs to dump some gold to pay for this military adventurism?
If they actually fight, that could happen. But right now, the Russians are busy buying more gold wherever they can.
Okay, Harold, the crude oil market has been relentless. Even when the stock market sold off, NASDAQ sold off 18%, S&P 10, and you really didn't get much in the crude. And here we are at new all-time highs here. Do you think that there's a higher possibility of an Iran nuclear deal so that, with the political situation the way it is and inflation becoming the #1 political issue, that if we could get Iranian oil back on the market, 1 million barrels a day, that would help President Biden's numbers if gas prices came down a little bit?
The Biden people are probably thinking about this because they have their backs to the wall with this domestic election coming up. So the opportunity is there. But let me talk about inflation.
Does this remind you of the 70s at all, Harold?
Yeah, it does.
Okay.
And I was involved, as you know.
Did you wear a win button?
No, I refused to put it on. But I was
all right, I didn't wear one
middle of
either.
all of that. From the going off goal decisions right on through.
Yeah.
But what we're not thinking about in this whole inflation question is the direct link between energy, as oil and gas, and food. And now I see the inflation in manufacturers subsiding pretty soon as inventories build and new orders start slowing. But the problem of food is ongoing, and I see the inflation continuing to be strong in food for several years out because we've got a confluence of higher energy, which affects fertilizer. It affects.
So basically, the Fed could raise rates 10 times. It's not going to affect corn and beans because that's more about weather. Also, the fertilizer issue. We don't have anything. We have to import it. It's gone up 3 times.
Harvesting all the way to bringing food to your house is very energy intensive. I mean, everything from running the machines to drying food in order to package it, in order to put it on trucks and trains to deliver it. It's very high energy use. And that's not going away. And then we have problems of crops.
Yeah, we have weather issues.
Yeah, and don't ignore this global cooling cycle, the solar minimum cycle.
Yes. Yeah.
I know it's easy to forget because it moves very slowly, but each year for a few years, the crop year will be shorter in many areas. And that will, for example, it's going to have damage for fruit trees in the west of the U.S.
Right.
So we've got this ongoing food problem with high energy, which is going to crush consumer spending. If you take the U.S., there have been some small wage gains, but between gasoline and food and heat
and housing,
all that's going to be eaten away. So we're going to have very weak consumption going forward for the next year or two.
So then, with this going on, how far do you think the Fed goes? Are you thinking that a lot of the banks that are saying 6, 7 hikes this year, that they'll be able to really go that course, or will they have to stop and maybe even reverse over the next 6 months or so?
Taking into account my political judgment, they'll make the first hike, and then they'll look at a second hike with great care, and there'll be no more hikes after that.
Do you think that Powell remembers that statement that hasn't really, really worked during other cycles recently? But there used to be, 2 hikes and a stumble?
Yeah, I think that's what we can expect and the economy will be stumbling also. So the outlook.
So we could have the worst of both worlds. We could have a recession and weak growth with very high prices for everything.
Yep.
Oh, okay. So are you stockpiling any peanut butter in your cupboard? Huh? What do you think? Do you think people should really prepare for this? I mean, you know, it's nice to talk about it. It's not as much fun when you're in the middle of it. Do you think that, you know, food security is something that, you know, people should, you know, we used to laugh at how, you know, preppers and, you know, certain religious groups are always preparing for emergencies or end times. And it sounds like we should fill up that pantry again.
Yeah, I know a lot of people are, you know, living off ordering food out nowadays.
Yeah.
And that whole process may dry up a few months from now. You
think the food, so a few months from now, you know, there's not going to be Grubhub because there's not going to be enough.
Well, it just won't be enough for us to have to charge so much that people will go back to grocery stores. But this pressure of heat, and gasoline to move around, it's going to be very, very powerful depressant on the economy. And with the economy looking weak, at least for the next year or so, and this frankly means growth.
Isn't this when leaders of nations actually don't shy away from war? When they have these type of economic conditions, yeah, I mean, historically, usually there's some type of economic crisis or failure, and then the next step is some kind of adventure, some kind of military conflict. Well, so are we there? And maybe Biden wants this war, or is he an isolationist?
I think he just wants the world to go away. He wants to work on the U.S. economy.
Okay.
So he's not comfortable with the world. Our military is ready, but they're held back. I don't think that there's any eagerness in Washington for
a war.
I think they feel trapped. The problem is going to be weak economy in Europe. We are greatly overestimating where China is. China's economy is really weak, and they will hide as much as they can in numbers. But the economy, in my judgment, of China is running at a rate of growth between 0 and 2%, but not above that. And so China.
So we have global weakness. I mean, they have been the global economic powerhouse as far as GDP for 10 years, 15, 20 years.
World trade is probably not going to be very strong this year. Now, the export-dependent economies like Germany, South Korea, Japan, China, they're going to have disappointing exports. In addition, if China is in trouble, they will try to keep production going, and they will try to push aside South Korea, Germany, Japan exports by stealing those markets, by dumping into the world market. So I think the outlook for the export-dependent economies is dire.
All right. Well, then let me ask you something, because I noticed this a few weeks ago. It's USD1. Here we are. Do you think they're going to? It's had a pretty nice. It's been pretty strong, right? So you get less ones. To me, this looks like some type of bottoming formation. Do you think we could get some? If China wants to export, do you think revaluation
Yes.
devaluation of the yuan is coming?
Yeah, I think it's in the cards.
Okay, so they'll use this tool too.
Yes.
Okay. Harold, I mean, there's so many different pots bubbling on the oven right here. What were you and Pippa most worried about? Is it the unpredictability of what Putin wants?
At this moment, yes. And medium term, this confluence of negative impact on consumption side of our economy. Looking further out, if we look past this year, then we're both quite bullish about a lot of new technology coming in what I call Industry 4.0, the next industrial revolution. It's a really, really big, sweeping process that's now underway, using new materials, substituting the stuff we dig out of the ground, which will mean shipping a lot less stuff across oceans, and manufacturing in ways we've not been used to. The most important being 3D printing. Nobody really follows that. Sounds like far out, but Habitat for Humanity, Jimmy Carter's project, he's now building entire complexes, residential complexes with 3D printing. It's using new materials. It's not plastic. It's very different. And they build these 3D machines. They're quite high, so you can build a whole wall all at once. The cost is much higher for construction, but the labor cost is reduced to about 5% of a normal residential construction. So the balance is this is a whole new way to go, but you don't have to use all this traditional material. So we're going to see quite a big change, but it's not in this calendar year. It's more pushing out beyond into next year. But many areas for possible investment opportunity in new materials. And new manufacturing technologies, and in new places. In new places, I think we're going to see some hollowing out in Western Europe, especially in Germany, but with a significant pickup in economic growth in the countries that lie between the Baltic and the Adriatic and Mediterranean, and so-called 3 Seas initiative. I think that area is just set to boom.
You mean like Slovakia, Slovenia?
Yeah, Romania, Bulgaria. Okay. Yeah, I think that's a really interesting area.
So if you're a young man, you might go out there and try and start something out there.
No, but that's where I believe the action is going to be next year.
Okay, interesting. Okay, that's going to be different than anything we've seen before in history. So I just want to leave it with this, Harold, that do you think there's a chance of Putin withdrawing, or is he going in one way or the other? And just a matter of when, not if.
He's playing with Macron and Schultz.
He's hacking you right now?
And, there's a picture in the world press today of back of Macron's head walking towards Putin. And Putin, if you see the picture, look carefully at Putin. He's in the distance and he has a big grin on his face as if he's about to eat,
Yeah.
But
he's going in.
I think he's going to do something.
And what kind of shock to the financial markets? A long,
Well,
like
that's
you
the
said,
question. Will he do anything that shocks the markets? It's possible.
yeah.
But
Will Germany let us shut down that pipeline?
that Germany won't get a choice. I think probably Biden told the Germans, "We'll shut
That's the way
it
it
down.
sounded.
We'll shut it down if you don't." So,
And I have one more question from an attendee, from Anthony. Will we be able to 3D food print our way to prosperity? Can we make food on the 3D printer?
no, but we can do food a lot of new ways. I mean, we're gonna, places like Singapore.
What, Soylent Green?
No, in Singapore, they're doing vertical farming, and in commercial office space. I mean, there's a lot coming that we don't know much about, but
yeah,
we'll figure it out. But it just means food's going to be more expensive. That's all.
It's gonna be tough to find a T-bone, I have a feeling. Right, Harold? So, fascinating again talking to you. Really appreciate it, and always look forward to it, because I can ask you anything and you have a response. And
well, I'm sorry that you didn't get Tracy yesterday for the energy.
Oh, she'll be here Friday. Yeah, she hasn't.
Yeah, well, I sent her a note. I was hoping to use what she said as a tee off for my own comments, but
well, Tracy has been saying for a long time, don't short crude. So she's definitely right. And tune in Friday, Harold. She'll be here.
Yeah, I'm interactive with her.
Okay.
By the way, one thing to watch out for. Most of the market information and the commercial internet flows from satellites through a small island in the north of Norway called Svalbard. And there's a cable, there are two cables from there going west, US, UK, to the world. The Russians, about 3 weeks ago, cut one of the cables. And they didn't cut it in one place, they cut it in two places, about a mile apart. It was meant as a signal from Putin to the world, I can do something that will really give you a heartache. Now, we don't know what will happen next, but if they cut both cables, our financial markets will have a heart attack.
There'll be holidays, market holidays, because there'll be no way for people to execute. The internet will go dark. Anyway, all right. So, makes me want to have a phone system with a Dixie cup and string. So anyway, Harold, thank you for that heads up as well. So, kind of like what I tell traders all the time, expect anything and expect everything. Just be prepared.
This is that kind of year.
Yeah.
And Putin, just one thing, Putin is expecting the Republicans to take control of the House and Senate at the end of November, after November. So this is for him the last chance to push around a weak president facing.
How could he resist?
Yeah. So don't underestimate. Everybody should be thinking. Of course, it's his last chance to do one big thing.
I hope it's also his last dance. Maybe this turns out to be a strategic error, just like, us and them going into Afghanistan. Yeah. And it ends up being his downfall.
This could well turn out to be.
That's my prediction.
I think there are differences at the top level of the military between them and Putin. I think there's concern that this is too big a gamble for Russia.
Yeah, there is chatter like that, and I'm a big believer in pride before the fall. And a guy who rides horseback with his shirt off has a little bit of an ego. What do you think, buddy? Huh?
Yeah, a big ego.
Thank you, Harold. Everyone, Harold Malgrim. You can follow him at Hal's Rethink. Pleasure speaking with you again, buddy. Appreciate all your pearls of wisdom and your insight. Thank you, Harold.
Okay.
All right, so that's a wrap, everybody. And enjoy the rest of your day. You could join the team in 15 minutes on the Morning Edge. Don't just count your pips or your days of freedom. Count your blessings. And I'll see everyone tomorrow. Adios.